To many people, SEC filings look like dense paperwork filled with legal language, accounting terms, and endless disclosures. Smart investors see something very different. They see a direct line into how a company actually operates, what management may be trying to highlight or hide, and where future risks or opportunities could emerge before the broader market fully notices them. At the surface level, SEC filings provide official information submitted to the U.S. Securities and Exchange Commission, but experienced investors do not read them only for facts. They read them for signals. Anyone can scan revenue or earnings. Smarter investors focus on changes, tone, and inconsistencies that hint at what's coming next. One of the first places they look is the annual report on Form 10-K. This filing offers the broadest picture of a company's business, strategy, and risks. For example, before Intel faced margin pressure and lost market share momentum, its filings had already begun to emphasize rising capital expenditures, manufacturing delays, and intensifying competition from rivals. The company highlighted the need for heavy investment in new fabrication facilities while acknowledging execution challenges. Investors who paid attention to these disclosures could see that profitability would be under pressure well before earnings declines, and stock underperformance became widely recognized. The risk factors section is another goldmine. While many retail investors ignore it, smart investors compare it year over year. A classic example is Tesla, which gradually expanded disclosures around supply chain risks and production challenges. These risks later materialized during global chip shortages. The key insight is not just what risks are listed, but what has changed. Financial statements remain central, but experienced investors go beyond earnings and focus heavily on cash flow. A well-known case is Peloton Interactive during its rapid growth phase. Its filings showed strong revenue growth driven by surging demand, but also revealed rising inventory levels, rising operating expenses, and weakening cash flow. As demand normalized post-pandemic, these pressures became more visible. Investors who focused on cash burn and operational efficiency, rather than just top-line growth, were able to spot early warning signs that the company's momentum was not sustainable. Footnotes are often where the real story lives. These sections include details about debt, leases, stock compensation, and accounting policies. For instance, Enron used complex off-balance sheet structures disclosed in footnotes. While not obvious at first glance, careful readers could identify unusually complicated financial arrangements that later became central to the company's collapse. Quarterly filings through Form 10-Q reports help investors track changes in real time. Smart investors ask one key question:
what's different this quarter?
During the early stages of the COVID-19 pandemic, companies like Delta Airlines updated liquidity discussions and risk disclosures in their 10-Q filings, highlighting collapsing travel demand, revenue pressure, and the need to preserve cash. Investors who paid attention to these updates understood how severely the business was being impacted before earnings fully reflected it. As these risks played out, Delta's stock price dropped sharply, falling by more than 60% from early 2020 highs during the peak of the pandemic, as investors repriced the airline industry's near-term outlook and recovery timeline. Current reports, Form 8-K, can reveal critical developments almost immediately. When Meta Platforms began disclosing major investments in its Reality Labs, Metaverse, segment, these updates appeared through earnings releases furnished on Form 8-K, along with deeper financial detail in its 10-Q and 10-K filings. The company highlighted rising operating losses and significant capital allocation toward long-term virtual reality initiatives. Investors who closely tracked these disclosures understood that profitability would be under pressure and that the strategy carried execution risk. As these concerns played out, Meta's stock price fell significantly, dropping by more than 60% in 2022 from its prior highs as the market reassessed growth expectations and the cost of its long-term investments. Insider filings add another powerful layer of insight. For example, when executives at Amazon or other major firms make consistent open market purchases, it often signals confidence in future performance. On the other hand, repeated insider selling across leadership teams can sometimes indicate caution, especially when it coincides with weakening fundamentals. In the end, smart investors use SEC filings not as a formality, but as a competitive edge. These documents help them move beyond headlines and narratives. They identify shifts in risk, earnings quality, and management behavior before they become obvious to the broader market. Start analyzing filings the way professional investors do. Access real-time SEC filing data, track company disclosures, and uncover trends early using our Filing Insights tools, built to help you move faster and invest smarter.